Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So what I'm going to do in the next few weeks inshallah is a lot of the companies that I own in this portfolio have reported their earnings, and what I would like to do is kind of share my view of what some of these companies have reported and just kind of give you an overview of what the analysts are saying just moving forward. So a lot of the companies have reported, so I don't like doing a video straight after the day they reported. I like to give it a couple of more days and then of course look at the company again, because by then they every analyst have actually looked at the company, come up with a new price, either going down or going up or whatever the case might be, and then they have, of course, the dust have settled, and then I can actually look at the company in the bigger picture. And that's exactly what we're going to do today. And before I tell you the company that we're going to talk about today, I would love you to join us on the Patreon account. If you can join us, you will get access to the buys and sells that I make frequently, access to the dividend trackers, you get access to the stock watch list, you get access to the Sharia compliant investing ebook, you get access also to the private Discord. So all of these things are something that you could potentially gain something from, as well as of course it helps the channel moving forward inshallah. And if you can't do any of that, of course basically click the video, the like button, and subscribe to the channel, open that the notification bell, so next time we post a video you don't inshallah miss out. So that out of the way, the company we were talking about today is Qualcomm. Qualcomm has reported their earnings recently. This is one of the best, in my opinion, one of the best semiconductor companies out there. And what I'm going to do now is just kind of give you an overview of the earnings report, as well as basically what the analysts have said since then, and then kind of give you some of the important metrics that we normally like to talk about. So the company has reported up closer to $10 billion. So this is the earnings report that just came. Okay, so closer to $10 billion in terms of revenue. In terms of GAAP and EPS, or just EPS, $2.46. In non-GAAP was $2.75. Basically, the company reports in three different segments. So we got the QCT, we got QTL, and we got the other. So the revenue for the QCT was about $8.4 billion. And QTL was $1.5 billion, and others, of course, basically when you add all of that together. So you got the return, you got the shareholder stockholders including 0.8, you got basically share repurchases, you got the dividends. So all of this is basically something that we appreciate, because of course we get the dividends. If they buying back more of their shares, that's good for us, and so on. And you can click this in basically to go to their website to find more information about the annual meeting of stockholders that's coming up on the 5th of March inshallah. Now, looking at just forward to the rest of the presentation, if you look at this, the company has this chip that they call is the Snapdragon, that's basically used within the Samsung products, and now they've actually included a bit of AI. It's quite powerful. I went to the shop the other day to check it out, just to see if I love Samsung products. So I'm actually I'm due to get a phone. I've had my phone for now 4+ years. So I'm currently looking at this one, and it's actually quite powerful. So the Snapdragon is basically the choice, basically for Samsung right now, for their new S24 products. So again, I like the fact that they basically right now, I think they're in negotiation with Samsung to renew that contract. They've done that same thing with Apple not long ago. So we'll see what comes out of that. So you see handsets, when it comes to revenue, if you break it down again even further, the handsets was $6.7 billion. And this is why this company has not done well last year, because of the market. When it comes to mobile phone markets, it wasn't great. And for that reason, people said, you know what, this company is done, people were selling. So around September, I think it was August, September, it was down quite a lot. And that's when I bought quite a bit of shares. And I'll show you exactly how much I'm up or down. And then automotive is basically just 598 million, and Internet of Things $1.1 billion. So as you can see, it's diversified, and I think Internet of Things is one of the big ones for them. They also have their own patents, so other companies have to use their patents, and they have to pay royalties to this company, which is quite nice. And this is, like I've always said to you guys, This is one of the reasons why I think this company should have a wide economic moat, just for that reason. But of course, there are other companies that sell, I don't know, groceries that have a wide economic moat, but this one doesn't. Although they have a patent that no one else can use, which is crazy, right? And then there's a bit more information on the presentation. So revenue was up and so on. And then you can see QCT, QTL, all of that, basically what is up in there, what has happened to in the last. So in comparison to Q1 of last year, as you can see, is actually up. So the blues this quarter, as you can see on this one, is actually up. And the EBT is also up 2.6. Last year was 2.2. And revenue from basically in terms of the QTL is slightly, in fact, it's exactly the same, 1.5 and 1.5 billion dollars. So it's actually not made a huge difference, although the bar looks slightly smaller. So 1.5 billion, 1.5 billion. But yeah, so handset 16% up. Automotives for this we're looking at now is the streams. And then you can see Internet of Things was actually down a little bit. So there are some more information in there where basically the companies, everybody's talking about AI, but rightly so. This company is actually creating a product that now has AI in it, and of course for that reason it has every right to of course advertise that and so on. So there's a bit more information in there if you want to find out, and you can go to their website as well. Now let's have a look at their overall the just valuations and things like that, and then we'll take from there. I'll show you exactly if this company is a buy or sell or whatever it is right now. So as you can see here, it's got dividend yield of 2.2%, which is quite nice. $161 billion market cap, so it's absolutely huge company. 80% safety when it comes to that dividend, so no issues there. When it comes to payout ratio, only 36% basically this year. 36% right now, and then latest increase was 6.7, which is quite nice, and that was March of last year. So hopefully the next time they will basically increase, next time they release their dividend, hopefully they will increase it again. And then dividend the last 5 years is 5%, which is fine. Normally looking for 6% and above, but since 2012 you can see they've been nicely increasing that dividend. That's now 20 years. So 5 more years this company will become a dividend aristocrat. You get $3.20 of every share of this company that you own. As you can see here, that's what you will get every quarter. And in terms of looking for the dividend yield theory, for example, it could be overvalued according to this, and the reason is because the current dividend yield is lower than the 5-year average. Although it's not far off, 2.46 and 2.21, there's not much difference, to be fair. And Qualcomm, when it comes to the technology sector, is right now 26, almost 27 PE, and the company is only 15. This company, I'll be honest with you, since I started buying it, has always had lower PE, so which is not bad at all. I mean, I like that. So in terms of earnings per share, we've already seen about they're expecting next year to be about 33%. So earnings per share, earnings payout ratio, and free cash flow payout ratio is about 31. Normally we're looking for basically below 50. We're normally looking for below 50, but right now 33, so they're expecting that, which is quite nice. Earnings per share, as you can see, it was growing nicely, and there was a bit of a decline in 2022, and then it has bounced back. So we're expecting it to grow for the next couple of years. Free cash flow per share is also heading the right direction, which is quite nice. So from $4.58 to right now 10, which is very, very nice. And then sales, you can see shares outstanding is declining, which is absolutely huge thing. And as you want this, because this is a mature company, they have a lot of cash every year. They're paying some dividends as well as, of course, buying back their own shares, which is very, very good. Total sales, okay, is actually going the right direction. 2022 was absolutely amazing. It was a great year for the company. But then, of course, 2023 was slightly bit of a decline. 2024 is actually bouncing back, which is nice. Return on equity of 38% and return on invested capital of 23%, which is absolutely healthy. Operating margins of now 25% and free cash flow margin of 27%, which is absolutely huge. Net debt to EBITDA right now we're looking at 0.23. This is how long, of course, it will take, how many years it will take the company to pay off that dividend, to pay off that debt. And as you can see, 0.23 is where it is now, so nothing actually to worry about on this side. Now if we go back here and check a couple of more things here, if we look at the earnings estimate moving forward, you can see is double digits Even if we just check the first three here, double digit, and then about 5, almost 6% in 2026. And then when you look at the revenue side of things, you can see about 6%, about 8%, again another 6%. That's the kind of thing that I expect this company. It's not a fast grower. It's not like 20% every single year. It's a very mature company. So I am very happy with that. So $37.9 billion to $43.6 billion by 2026, which is absolutely fine by me. Now looking at Yahoo Finance, so the next year they're expecting the earnings to grow about 10% and then almost 7% every year for the next 5 years, which is quite nice. And as you can see here, the current price is $145 per share, and basically the average price is $148 per share. So just a little bit upside from there. They have basically 3 strong buys and then 7 buys there as well as that. Now looking at Morningstar, you can see it's 3 stars right now, which means it's fairly valued, exactly that. And their price target is $140 per share. They've talked about basically the fact that we maintain our 140 fair valued estimate and view shares as fairly valued. So that's basically after the February the 1st, that's when they actually said this, which is quite nice. And like I've always said to you guys, this should be basically wide economic mode. Again, it doesn't bother me. I'm not worried about that. And if we look at how much basically the company has returned, total return in the last 10 years to shareholders, about 9%, which is absolutely decent. Now, if we go here and go to charting, we just want to compare this company with Texas Instrument, maybe, I don't know, Marvell, and maybe, okay, that I think will do for now. And then if we then select the matrix that we're after, so if you click performance and then total, okay, I want to see how the company has done in the last 3 years first, okay, in comparison to the rest of them. So about last 3 years is about just 4%, 26%. Texas Instruments is about -1%, and then basically this one is 30%. Marvell is actually 31%. So this one is done actually better. In the last 5 years though, 220%. The S&P 500 is only done about 81%. So that's huge. So if you hold this company for the last 5 years, I think I've had this company in my portfolio since 2020. So 2020 August, I think it was when I bought my first share. InshaAllah, I'll show you that in a second. So hopefully in 5 years down the line, I would be up, I don't know how much, but I don't know, 50, 60, 70, 80%, whatever it is. Okay, so 70% in basically for Texas Instrument, and as you can see for analog devices, it's 107%. Marvell is actually 263. This one is actually outperformed out of all of them, which is quite nice to see anyway. And then for the last 10 years, we're looking at 153%. The S&P 500 is 167. So the market has beaten Qualcomm in the last 10 years. A couple of more things. I go into now simply Wall Street. As you can see here, they're expecting the earnings to grow about 9%, 9.6%. And then the valuation is right now, it's about 14% undervalued, which is nice to see. So $165, $7 per share is where they think the price should be. That's about 14% upside from where we are right now. And also looking at tip rank, as you can see, $162 per share is a moderate buy, and it's about 12% upside from where we are. If we go back and click ratings and click Wall Street, you will also see it's around the same. So $160 per share, 10% upside from where, or 11% from where we are now. So again, it's a solid business. So there's about 13 people saying it's actually a strong buy, and 14 are saying it's a hold. And for that reason, it's actually a buy rating right now. So it's a solid business. I genuinely like the business. I wish and want the company to start maybe acquiring other business, like do what Broadcom has done in terms of diversifying away from semis and networking side of things to more software side of things. That will be absolutely huge. And the company has, if I can show you quickly, it has about $10 billion of free cash flow, I think. Okay, and which is quite nice, and hopefully they can use that almost $10 billion of free cash flow. So hopefully if they can acquire other businesses, okay, in the next few years, maybe add a bit more software, kind of diversify, do like what Broadcom has done. Broadcom has done an amazing job in acquiring other businesses for the last 10 years, and now it become this behemoth company. So it's wonderful to see that. So hopefully Qualcomm can follow that. And as you can see here, I own 40 shares of this company. Right now I'm up about 17% or £655. Now some of you will remember, I think it was September of this year, that we were down a lot when it comes to this company. And I want to very quickly show you how long I've had this company. And sometimes it is important that you don't buy, sell these companies just like all the time. 14th of August basically is when I bought this company for my half a share. Since then I've been buying every single month, every single year, getting a little bit of dividend, never sold it. Been buying since then up to, I think September was the last time I bought 2 shares. I bought in September, and then again September was another 2 shares. July of last year was bought 1 share, and so 4 shares in May last year. So when it was down a lot last year, I was buying heavily. So 22 and 3, I actually bought quite a lot of this company, and the reason is because it was down so much, and I actually believe in the business, and I think it's going to stay around for a long time. So I really like the company. I've no business of selling it, and right now, as you can see, I think it's getting there. Okay, so it's getting there when it comes to now. It's my 6th best holdings when it comes to my entire portfolio. I have over £4,500 in that company. So inshallah, I'll continue to hold it. I'll let you know inshallah what I think about the company. But yeah, that's what I wanted to share with you guys. If you're enjoying this type of content, it takes a lot of time to put these things together. Please like the videos. That's the least you can do. And also, if you can, join us on the Patreon account. Have a wonderful day. Assalamu Alaikum.